Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TRIMAS CORP quarterly report. TRIMAS Corporation offers a diverse range of businesses and services across three segments: packaging, aerospace, and specialty products. The packaging segment provides various products including dispensing systems, caps and closures, polymeric and steel, polymeric jar products, integrated dispensers, bag-in-box products, consumable vascular delivery, and diagnostic test components. The aerospace segment offers fasteners and collars, blind bolts, rivets, and ducting connectors for air management systems, highly machined parts and components, military and defense aerospace applications, and platforms. The specialty products segment includes steel cylinders for compressed gas storage and dispensing natural gas-powered engines, compressors, and replacement parts, spare parts for industrial engines. The recent surge in TRIMAS Corp's stock price can be attributed to several key factors. The company's strong financial performance has been a major contributor, with each quarter of 2025 showing significant growth in profit and sales. In Q3 2025, TRIMAS reported a 41.9% increase in adjusted diluted EPS and a 17.4% rise in consolidated sales. This trend continued throughout the year, with Q2 2025 seeing a 32.5% increase in aerospace sales and Q1 2025 reporting a 24.3% jump in adjusted diluted earnings per share. Additionally, TRIMAS strategic acquisitions and divestitures have also played a role in its stock price growth. The company's acquisition of GMT Aerospace and divestiture of the aero engine business are part of its efforts to optimize its portfolio and drive future growth. These moves demonstrate the company's commitment to innovation and expansion, which has likely boosted investor confidence. Overall, TRIMAS Corp's consistent positive financial results and strategic business developments have cumulatively contributed to a significant increase in its stock price over the past year. The primary drivers of revenue growth or decline can be attributed to several key factors across the company's segments. Revenue growth is primarily driven by the aerospace segment, which experienced a significant 37.1% organic growth due to improved throughput and commercial actions. The packaging segment also saw a 4.3% organic growth, while the specialty products segment reported increased sales of steel cylinders with a 31.3% growth. On the other hand, revenue decline was mainly attributed to the loss of sales related to the divestiture of aero engine business in the specialty products segment, resulting in a $17.1 million decrease in packaging segment revenue and a $26.9 million operating profit decrease. However, these declines were partially offset by acquisition-related sales growth from GMT Aerospace. Neutral factors contributing to revenue include currency exchange, which had a favorable impact on net sales of $2.1 million. Overall, the company's revenue growth or decline is largely driven by its segment-specific performance and strategic decisions. Net income and profit margins experience significant growth. The company's net income has seen a substantial increase in recent periods. In Q3 2025, it rose by 267%, while year-to-date, YTD 2025 saw a 57% growth. The YTD 2025 net income also increased from $18,610 to $38,440, representing a 107% rise. Profit margins have also improved significantly. The gross profit margin increased from 22.6% to 24.5% in both Q3 and YTD 2024. Meanwhile, the operating profit margin rose from 3.6% to 6.1% in Q3 2025, and from 5.5% to 8.3% in YTD 2025. The reasons behind these changes are multifaceted. A decrease in foreign currency translation losses contributed to the increase in net income. Additionally, lower expenses such as provision for losses on accounts receivable and change in asbestos liability also played a role. Furthermore, higher sales levels, improved fixed cost absorption, favorable product sales mix, and other factors like no repeat of labor union strikes and favorable commercial actions within the aerospace segment all contributed to the growth. The sale of aero engine business and lower professional costs associated with business acquisition, diligence, and transaction-related activity also had a positive impact. Overall, these factors have led to significant improvements in net income and profit margins for the company. The company's financial performance indicates a positive trend in operating cash flow. In 2025, the net cash provided by operating activities reached $75,930, a significant increase from $36,700 in 2024. Furthermore, operating cash flow surpassed net income in both years, with a notable difference of $37.5 million in 2025 and $18.3 million in 2024. This suggests that the company is generating sufficient cash to cover its operational expenses and invest in growth initiatives, indicating a strong financial position. The company's debt level has undergone significant changes. Long-term debt increased by $8,950, while total liabilities rose by $51,960. Furthermore, the debt under the revolving credit facility surged from $1.5 million to $10.9 million. In contrast, interest expenses have shown mixed results. Initially, they decreased by $0.5 million and then increased by $17,990 compared to the previous period. However, the actual interest expense coverage ratio improved significantly, rising to 10.46x from an unspecified previous level. Overall, while there are some fluctuations in interest expenses, the company's debt level has experienced notable increases. Management's outlook for the company is optimistic, driven by steady demand in packaging and aerospace segments. They anticipate long-term growth in these areas, with recovery expected in specialty products. To achieve this growth, they plan to generate organic growth through product development, cross-selling, and acquisitions. The company will also continue to assess and address variable and structural costs, maintain a strong capital structure, and leverage its business model to offset inflationary pressures. Additionally, management is evaluating opportunities to return capital to shareholders through stock purchases and dividend payments. The company has made several strategic acquisitions and divestitures over the past few years. Acquisitions include various companies to distribute its products, expanding its Reach GMT aerospace business from GMT Gummy Metal Technic GmbH for $37.7 million, acquisition of GMT Aerospace in February 2025. Divestitures include divestiture of Aero Engine business in January 2025 for $21 million, spin-off of legacy Sequent businesses to create Horizon Global Corporation in 2015, and its subsequent acquisition by First Brands in 2023. The company has a history of distributing value to its shareholders through both dividends and share buybacks. The financial records show that the company has paid out dividends on multiple occasions, with specific amounts and dates listed throughout the documents. Additionally, the company has also engaged in share buyback programs, purchasing shares at various points in time, as indicated by the provided page references. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. The company's finished goods and raw materials inventories have increased significantly, with total inventories rising by 8.6% over the past year. This increase in investment in inventory is a concern, as it may indicate that the company is struggling to manage its stock levels. Furthermore, supply chain disruptions are also a major issue for the company. A concentrated customer base and potential disruption of operations from catastrophic events pose significant risks. The current economic environment is uncertain and volatile, with input cost inflation, supply chain disruptions, and shortages in global markets contributing to these issues. Material and labor availability problems, volatility in demand levels, increased costs due to tariffs, and prolonged labor union strikes have all impacted the company's manufacturing operations. These concerns suggest that the company may be facing significant challenges in managing its inventory and supply chain, which could have long-term implications for its financial performance. That concludes the financial summary for TRIMAS CORP. Feel free to comment below, and I will be happy to answer them when possible.